Welcome to Muffet Investment Views, your go-to channel for insightful investment analysis and market trends. Today, we're diving into the UK's housing shortage and exploring how UK house builders might benefit from the recent political changes. Over the last 2 years, the shares of UK house builders have fallen, with falls amounting to more than 50%. This has been due to difficult economic conditions with rising inflation and interest rates and cost of living crisis. Also, the failure of the Conservative government to tackle the planning restrictions that have been in place for many years has also made planning permissions much harder for the house builders. However, some conditions have changed which make us very bullish on UK house builders. The UK has been facing a housing shortage for several years now. With demand far outstripping supply, house prices have soared, making homeownership increasingly unattainable for many. While earnings have doubled since 1997, the house prices has increased 4.5 times. The average house prices has doubled from £150,000 in Jan 2005 to £300,000 now. First, let's understand the magnitude of the housing shortage. The UK needs around 300,000 new homes each year to meet demand, but for many years we have been falling short of this target. Last year, only 230,000 homes were built. This shortage has driven up prices and rents, putting pressure on both buyers and renters. The rents have increased with rising interest rates, as you can see now. With the recent election of a Labour government, there's renewed hope for the housing sector. The Labour Party has pledged to tackle the housing crisis head-on by relaxing planning permissions and boosting house building efforts. One of the key manifesto promises of the Labour government is to build houses in greenfield land. They'll also mandate quotas for local authorities to build social houses. By making it easier for developers to get the green light for new projects, the government aims to accelerate the pace of house building. This could be a game changer for the sector. In response to rising inflation, the Bank of England has raised the interest rates, and this has increased the cost of mortgages and has slowed the housing market by reducing affordability. Now that the inflation rate is falling, we can expect the Bank of England to reduce the interest rates. This will give a further boost to the housing market. House builders stand to benefit significantly from these changes. Companies like Barratt Developments, Persimmon, and Taylor Wimpey are well positioned to take advantage of the relaxed regulations. Increased building activity will likely boost their revenues and profitability. We have already covered Barratt Developments. We already hold Barratt Development. Please refer to our video on this. Persimmon has fallen almost 2/3 since its high and has now rebounded. It has a nice cup and handle pattern on the chart, with a possible breakout happening soon. Its price-earnings ratio is 18 and forward dividend yield of 4.1. Taylor Wimpey is another large UK house builder. Its price-earning ratio is 15, and the forward dividend yield is 6.3%. Its chart is also better, with the 20-week moving average crossing the 50-week moving average. Over the next year, we can expect it to reach 200 pence per share, provided the economy continues to improve and Labour government is able to sort out the planning constraints. Finally, we have the Berkeley PUC, which has the strongest chart of all. Its price-earnings ratio is 13, but its dividend is only 1.37%. Increased house building will have a ripple effect on the economy. More construction activity means more jobs, increased demand for building materials, and overall economic growth. This positive cycle can boost investor confidence in the housing sector. Of course, there are risks to consider. Labour may not be able to keep their promises. There may be MBY lobbying, which can prevent more houses being built. And finally, if we have a financial crisis, like in 2008, then house builders will be very negatively affected, with freefall of their shares. In summary, the UK housing shortage, combined with the Labour government's proactive measures and potential interest rate cuts, presents a unique opportunity for house builders and investors. As always, thorough research and careful consideration are crucial when making investment decisions. Thanks for watching Muffet Investment Views. If you found this analysis helpful, please like, share, and subscribe to our channel for more insightful content. Let us know in the comments what topics you'd like us to cover next. Until next time, happy investing.